So the movement, well, we can go ahead and get started, but want to again reiterate that there is potential for loss when trading futures and options, and should make sure that you understand that loss. This is not a trade solicitation, just for information purposes only. Yeah, so we've been all over the place, kind of just go over ags. Corn's down hard today. It's been really choppy. So we were doing good last week. We sold off hard. What day was this? Today's Wednesday. So we sold off hard last Thursday and Friday going into the trade deal with China, or the meetings with China. I think the market was looking for something concrete. And whenever we didn't get that, we just saw risk off. So the funds have a pretty sizable long position in corn. And so it does, I don't know if you look at this, but the Commitment of Traders report shows fund positioning and commercial positioning. And so commercials would be like end users usually are taking the other side of the funds. So as a hedge position. Anyway, funds have a sizable long position in corn. So that means like managed money is betting on the long side. And we saw fund liquidation Thursday and Friday whenever they didn't get the trade meetings were good, but we didn't get anything concrete announced. The market was looking for something more, apparently. And then we did get something announced, after the close, which, surprise, surprise, that headlines come out whenever the markets close. Yeah. So anyway, been extremely choppy. We've held the 50-day so far today on the daily chart.
Laura, this is like hugely atypical. Yeah. This kind of behavior.
I mean, we'll get it. Yeah, we do have it from time to time. It just it's been, for like at a weekly chart. I mean, we've been very compressed for the past 2 years. All of 2025 was just in a small sideways range. So we're at higher price levels than we have been for the past 2 years, but we'll get into time frames where we get a lot of, headline driven markets in ags and grains, more weather markets, where you get the big volatility of like you get rain in the forecast, the market sells off because it's made the crop. Then the rain doesn't materialize, so market rallies because there may be a drought, and then rain comes back into the forecast, sells off. Rain does or doesn't rain, or not as much as expected. So we'll get volatility. We just haven't had volatility in the ags in a couple of years. My opinion is that, when Powell said rates are going to be higher for longer because he wants inflation to come down, the funds took just a large short position and carried it over for 2 years, adding to that position. The market never really priced in any risk. And so I think a lot of that just followed interest rates. And now we're starting to see the opposite of that happen a little bit. So there's more desire to own commodities as inflation picks back up, or has the potential to. Wheat,
excuse me,
sideways. Soybeans, more of a defined trend than corn. Corn's more range bound. Soybeans still working their way higher. Sold off hard on Thursday, Friday, came back up, down today, just following crude being down. And let's see, let me find July crude. That rolled off.
Remind me of the average contracts traded per day.
Do I have that? Yes.
Yeah. I didn't know if you knew it offhand.
It's gonna be different for each product. So yeah.
Oh, I was looking at corn still in my mind.
Yeah. Let's see, I can bring it up over here. It's like, here's cotton. It's traded 15,900 contracts. Wheat's traded 18,779. Corn. Corn's traded 80,000 contracts. S&P's traded 965,000 so far today. Feeders 6,900. So corn's your deepest market, most liquid market.
Yeah.
Wheat's fairly thin. Cattle extremely thin. So cattle are down hard today. There's been some news out in that market. And so they are selling off, but they've been in a long-term uptrend. Yeah, anyway, so meal's also been kind of leading, and soybean oil. Let's see, I have that up here. It's not the right one, but so I'm just kind of seeing pressure. I think everything's really just following crude kind of risk off scenario. Do you have any questions about any markets to kind of go over before we maybe look at some options?
Excuse me, Bueller.
Yeah. So, okay. We can look at some option strategies, theoretical. So one thing, let's talk about, let me find the right screen. Here we go. So let's say, let's just think about corn. Corn's more range bound maybe than soybeans. So one option strategy we could look at is selling options. So selling straddles. We can look at, so a straddle would be a put and a call at the same strike price, either buying both of them or selling both of them. So if you're buying a straddle, you would be buying the put, buying the call at the same strike price. If you're selling a straddle, you would be selling a put and selling a call at the same strike, at the money. If you're looking at a strangle, it would be out of the money. So let's look back at the corn chart. December corn. So we've been in this range. Let's look at the weekly chart. So you could say middle of the range from last year, bottom of the range for this year would be like 450 to 460. Upper end of the range has been 510. So let's look at, let's just walk through some examples and look at that. So right now, Dees corn is at, 487. So let's say let's see what it's pricing at. You know, 485 put, 485 call. So if you were to buy that, it would cost 66 cents. So if you were to buy the at the money put and at the money call, you would be taking the position that you expect the market to move 66 cents more out of this range. So you don't make money until we get above 550 or we get below 420. And then these are the days till expiration. So these December options have 184 days left. So let's just say like 90 days left, 60 days left, 30 days left. Get closer to that theoretical value at expiration. The green line is at expiration. And then the red line is theoretical at today's market. So 420 to 548. Let's go back and look at the chart there. So 420, you might have to put this here. Here's our line down here. And let's just say 550 on the high side. I can't drop this. So that's what the market, this range is what the market's pricing in. And let's zoom out on the weekly chart. And then we haven't been, my lines are still there. So that's paying for volatility it's making you pay for that. I don't know why anybody would buy that. Yeah, expecting a huge breakout. But you could sell it, and it's the same graph. So you make money as long as we stay within 420 to 550, 545, just say 550. So, most options are meant to be sold instead of bought, but you're going to take the risk on that. So when you're buying an option, you have limited risk. You know what you're paying for it. When you're selling an option, you have unlimited risk because you're collecting that premium, but that's the maximum that you can collect. So maximum you could collect is the 66 cents, but if it goes outside of that range, you have unlimited risk. But that's what the market's pricing in, a 60-cent range. So if we were to move outside of that range, I think we talked about this last time with the 0 DTE options and what the market's pricing in versus what is unexpected. So if we start to move outside of that range, then you get into, someone on the other side are selling these options. So they've got to hedge off that risk. And so then you get into a lot of delta hedging, and the market potentially get another standard deviation move outside of that range just because of people hedging off their options book. So, that would be a sell. You're bringing that in, you're collecting the premium, and you're assuming, or you're trading the bias that the market stays within this range and those options expire worthless. You could come out a little further out of the money, and let's say we do like a 470 put and a 525 call. So now instead of collecting 66 cents, you're collecting, I didn't price it up here, but it settled at 45 cents. So you're collecting 45, and your risk has gone from 425 to 570. So pretty much same downside risk, but you've widened your wing risk to the upside. And let's look at soybeans. Since they've been less range bound and more trending, let's see here. So November beans are trading at $11.92 3/4, just say $12. So if we sell a $12 put, a $12 call, corn was giving you 66 cents for that, and beans are giving you $1. Let's see if it will. So, your wing risk, there's 1308 to 1090. So just something interesting to look at. Let's look at.
Give me more money and more vol. I'll take it.
Yeah. So 13 to basically 10. So that's probably the play here, given all this choppiness. Of course, if we do get, drought continues, weather issues continue here or South America, fertilizer issues continue, we could get, potentially we move outside of that range, but that seems like kind of the trade to do at this moment, rather than paying for long options. So what else do you want to look at? You want to look at some equity options?
Yeah, let's.
Okay.
Definitely. Does anybody have any questions so far? Is anybody here?
Yeah, I don't. That's what I'm wondering.
Yeah.
Move this on the way.
Hi, Brad. Thanks for showing up.
So, I always forget which one I'm supposed to click on. Here we go. So here's your 0 These expire today. And we are at 74.38.
Thanks, Judy.
74.30 put. Here we go. 7 cents. So obviously, I think that's fairly low. I think that's fairly cheap given the environment that we're sitting in. So if we were to do that same strategy, you know, I wouldn't be afraid to buy that straddle or strangle. So let's see. Yeah, 0 days till expiration. So let's say we buy the at the money straddle. See what that looks like. We're at, where are we at again?
So do 74.40.
Okay. You know, so you could buy it. It'd cost you 21 points. Yeah, almost 22.
Yeah.
And then, you know, is that cheap? Is someone, you know, is that low value or high value? You'd want to look at the daily trading range, see what that looks like. But I would not sell that because there's a pretty good chance we could move 20 points either direction. And then you've got unlimited risk. One thing we will do is like selling different time frames and then buying, hedging off your wing risk with shorter expiration. So let's
Do that one more time.
So you sell the longer durated option.
Yep.
And you hedge off that wing risk with shorter duration options. So like
A weekly versus a daily, or
yeah, or the full contract. So these expire, they have 30 days, 29 days left. And they expire June 18th. So let's say you sell that at the money straddle. So you're collecting 250 points.
Mhm.
Yeah, on the short side, it's not showing up for me.
If it stays within the range, yeah.
Yeah, so we are going to sell this. So it's at 249. So just for easy math, say 250.
Yep.
So we're selling it. And then, you know, you lose money below, just say it's below 71.90, say 7,200 and 66.85. So then you can come in here. You know, these expire These expire June 18th. These expire, I mean, you can pick any day. So just say May 29th, next week. And you hedge off that wing risk. That's probably not going to graph very good, but we're going to switch it around. And just know that we are selling this instead of buying it, but the symbol is W. $7,200. What was the upside? 76.85. Okay, so this is not going to graph because they have different expirations, so it has a hard time graphing that. But now we go to trade. No, it's not going to work.
You're on the demo for CQG.
Yeah, because since I'm on demo.
Yeah.
But let's do this. So you're actually selling the full dated straddle, collecting that premium, and then hedging off, spending a little bit to hedge that off. And so if we buy that out of the, selling the straddle, collecting that premium, buying the strangle to hedge off your wing risk.
Yep.
You could do that for, it says it's settled at 16 points. So you're giving up
250 versus what's
right. Yeah. So now we have wing risk here. These expire May 29th, but every day that we get closer to that expiration, you know, your risk goes down because, you know, you're not there. And then you just continue to roll those short dated options off to hedge off that risk. So one strategy I'll do generally in corn, like every year, we'll do it. So
Did you say every year?
just, yeah, generally every year I'll do this strategy. So let me price it up. So we're doing it as a hedge. So we want downside protection against December. Let's look at doing it for next December for these 27.
Is it cyclical when you choose to initiate the strategy? Like,
Just
is it every February or whatever?
kind of whenever the market's had a chance to make its move and then the crop is known, like in the wintertime, like we get into we've gotten through harvest. And so a lot of the unknowns have settled out. So let me walk you through the strategy and then kind of explain it. You can do it anytime. I just kind of look at it when we start looking at the next year's crop. So these 27, we're at 496. So I'm going to do like an out of the money put spread. I'll do like $4.50 to $4 put spread. So out of the money put spread, I'm trying to see what I can get for nothing. And if the options expire worthless, then I have something for nothing that I can use it, may become valuable down the road. So $4.50 to $4 put spread. And I can buy that for, it's not going to work on demo, but 12 cents.
Yeah.
Potentially, I mean, the market's down today, so it's going to be more expensive. Let's just say 15 cents. Then I'm going to see what can I sell for 15 cents that I'm going to assume is going to expire worthless. And let's see here. So these are short dated options that go against the December 27 contract. And so let's do like a 460 put. I could sell it for 8. So just in theory, you know, I'm selling these out of the money puts, assuming that we stay above them, and they expire out of the money. And I use that premium to pay for the full dated option that still has, you know, these have 156 days and December 27 has 555 days. So I'm taking the stance that if the market stays above this strike price, we collect that full premium and I use it to pay for the option strategy for the downside protection, the hedge on something with 600 days. So then whenever these roll off, I get a chance to sell another short dated option against that strategy. And you're just collecting premium, rolling it, collecting that premium against something with more time value, because you don't really want to pay for time value because you're just spending too much on option premium. So you can sell that time value and then use the short dated options to pay for it and continue to roll that. Or you can pay for the full dated time value and use the short dated options to cheapen it up and collect premium. So, any questions?
I don't have any.
I like the, you know, general, even in equities, you could have just a general strategy, directional strategy to fit your bias, whatever that may be. And then use those weeklies or dailies. It's going to be a lot of, you know, constant maintenance if you're on the dailies, weekly maintenance if you're on the weeklies, whatever it may be, to kind of hedge off that wing risk and trade around your core position.
I wonder if anybody in the room trades Russell. Will you pull up the Russell options?
I don't even know what the symbol is for the Russell. What's the symbol?
I want to say is it RTY?
RT.
Oh, for CQG, JB?
Yeah. Yeah, so same thing.
Where are they
You could
putting?
even, I mean, depending on what you wanted to do, I mean, you could sell 2 days expiration. What is that? That's May 22nd. Is that Friday? Yeah.
Well, it's the
So
biggest
you can
mover
sell
today. So I want to see where the most volume is at what strike price.
today
Yeah.
for the 0 DTE.
Yeah, please. Yes.
Yeah, so here's your open interest. So on the call side, we have 200 here at the money, and some up here, 3,000, but that's probably someone hedging off a bigger position. 50. So most of it here, 28,100. Put side, you have 155, 265, 216 at. Let me make this bigger. So more volume to the put side, or more open interest to the put side out of the money.
Mm-hmm.
Call side, really don't have much.
Yeah, it's interesting. Like the call side, it's just, how much more of this move are people speccing?
Yeah, willing to pay for.
Yeah.
Or are they speccing with, are they long futures and they've got their puts to hedge off the risk?
That too.
Yeah. Okay. Why don't we move over to mindset?
Okay. Let me just make sure that these dogs stop barking. So hold on one second.
Okay. Any questions? Okay, I'm going to stop the screen share. And if I can figure out how to do that, so that way Dani can come on.
Battery day. Sorry about that. Everybody here? Lauren dropped off? Yeah?
Yeah. Can you hear me now?
I can hear you.
Okay.
Yeah.
Okay.
Sorry. Did you hear a squeaker toy? Oh, God. All right. Let's do some screen share. Awesome. Thanks, Marley. Okay, so for today, you guys, let me bring this up. Here we go. Okay, let's scroll all the way up. Let me move this over. Can you guys see that?
Mm-hmm.
And then let me download. Will it let me? Did you guys receive that?
Mm-hmm.
Cool.
Yep.
All right. So based upon last week's visualization session, I thought that we just set a session protocol that will start with, a few minutes of breath work, then we'll do a quick body scan to get you into your body, out of the movement of the screens and the mindset of must make trade. And then we'll talk about mindset work. Does that everybody agree about that?
Mm-hmm.
We're good? Okay, so let's just start with breath work. So for those who are listening or not in the room, but are listening on YouTube, go ahead and just find a comfortable seat. You may be standing and that's okay. Just be mindful when you're standing. And then if you'd like to close your eyes, close your eyes. If you're comfortable to close your eyes, great. If you'd rather just soften your gaze and look down ahead of you, that's okay too. All we're going to do right now is to tune into our breath. So you're just going to tune in to your breath. There's no pressure. It's just noticing how your inhale, exhale rotates. And typically when you draw awareness to your breath, you start to breathe a little bit deeper. It's just totally natural, but it's to engage that connection to your life force. So just inhale, exhale naturally. And when you start to do that, it's so different because when you're sitting at the screens, you're breathing obviously, but you're not aware of your breath. So when you start to focus on your breath, when you're sitting at your screens, it's a little bit different. You can tell you get more energized, you're refocused immediately after that first cycle of inhale, exhale. So then go ahead and just take a little bit deeper of breath. So inhale through the nose and fill up your belly. You want to do about 360-degree breath, so front, side, back. Get that deep diaphragmatic breath going. So inhale, exhale. And see if you can actually fill up the middle of your belly, so just at the where your rib cage meets. We spoke about that. That's where the solar plexus is. So can you inhale your breath to the middle? So not just so deep, but still that 360 breath. And keep going, not too forced. So still gentle, and you're just still paying attention. So somewhat, if we were to make the metaphor or the parallel to trading, you know, it's coming to the screens, you're aware of your breath, you're aware of the market, there's no pressure, no anxiety, no excitement, there's just natural observation. And then when you put intention to it, you start to focus the direction of your breath. Maybe even now intend to breathe into your heart space. So your chest lifts as you inhale and depresses as you exhale. So with intention, then you can look at your plan and prepare how you want to execute for that day. So same goes with your breath. You observe, then you have intention. And as you keep going, so inhale, exhale, just slowly. We'll do one more minute. And if you think about it, we've been doing this for only 2 minutes. So you certainly can do this on your phone in front of your screens. Takes nothing, no money, little effort, and connects you to yourself.
Yeah, it feels like longer than 2 minutes. Feels like everything's slowed down.
Right, isn't that it's a miracle?
Yeah.
I mean, it just takes a little reminder. So 30 more seconds. And see what feels good to you. So maybe you could say, you know what, I feel disconnected from my breath when you're trading, and you catch yourself, you've over traded, you know, maybe 2 more executions than you really would like to. You take a seat back, and then you do 3 rounds of deep belly breath, or just 3 rounds of intending to focus on your breath. All right, so just exhale it out. You can awaken your gaze, open up your eyes if you close them. So the second thing I want to do was just go through a short body scan, and that's really just taking you away from up here in your mind and putting you back into your body. And I think we talked about it last week as well. Once you draw awareness to a body part, it's almost like your body gives you this immense gratitude for calling it out and paying attention to it in a way that typically we don't. So if you could, again, close your eyes if you'd like, leave them open if you'd like, and then draw your awareness into your right foot. Yes. This is just purely, thanks, Lauren. This is purely for education purposes. And as you draw your awareness to your right foot, then bring your awareness all the way to your ankle, your calves, your knees, your quads, front, side, back, your hips, right side. And then draw your awareness over to your left side. Start at your foot, your left foot, your toes, the bottom of your foot, top of your foot, your heel. And perhaps you even feel some sensation. Your ankle, your calf, your knee, your quads, hamstrings, hips, left side. And then we go to your pelvic, your glutes, your lower belly, your mid belly, solar plexus, your upper belly, your heart, your chest, your low back, your mid back, your upper back, your shoulders, your upper arms. Go to your right side first. Your triceps, your biceps, your elbows, your forearm, your right wrist, your right hand, fingertips, palms. Then move over to your left side, your left upper arm, your left elbow, your left forearm, your left wrist, left fingertips, including your thumb, palm, and come back to your neck, the front of your neck, the sides of your neck, the back of your neck. Draw your awareness to your jaw. So if you're clenching your jaw, just release your top teeth from your bottom teeth and even your tongue from the roof of your mouth. Let it hang slightly open. Your cheeks, your ears, your eyes, your eyebrows, your forehead, your scalp. Just notice the attention that you pay to your scalp. More often than not, your shoulders will release further down your back. And then the top of your head. And take a deep breath in and exhale it out. Okay, awaken your gaze if you close them. Let's talk about some 3 states of market engagement. First and foremost, now that you're in your body, we're going to check in with our body where these sensations in these 3 states sit, because I know I'd put a big wager that we've all experienced all these states. The first up is FOMO. So the fear of missing out. So have you ever taken a trade that you had FOMO? And especially in these rooms, it's also easy to have FOMO when people are taking trades and you didn't take the trade and they're making profit, or you took the trade as well, but they're taking profit and announcing their profit, and you took the hit because maybe your timing was off, or the market was off for you and your timing. Okay, so FOMO is a big one. Has anybody experienced FOMO before?
Absolutely. How many times a day, I think, is the question.
Yeah. So Brad. Yeah. So for me, FOMO is not, I'm more of the second state than I am FOMO. While I do understand FOMO and I have it, I feel that feeling in certain circumstances. It's not often that I do it with the market, and I'll talk about the second state and it'll make sense. But okay, let's run through FOMO. Something already happened or appears to be happening. You feel left out, and it always looks backward and sideways at what other people are doing or what already moved.
Mm-hmm. Or you have a strong opinion and it's going in the direction of your opinion and you're not in because you got stopped out, or waiting. You got close to your order, but not all the way there, and then it went the other way. whatever.
Yep. 100%. So in the body, it's a sinking urgency and a contraction in the chest, possibly. So if you've experienced FOMO and you can recognize it and remember it, where in the body do you feel it? Like, is it in your hand when you're clenching your mouse? Or is it in your chest? Or is it in your stomach? And so now that you have breath work as a tool, or perhaps you had breath work as a tool, but weren't using it in this fashion, you could send your breath to that area to help soften. So it doesn't trickle down the effect of that sabotage cycle that we all also know very well. Right? You're mad, and then you take the next trade, and that becomes the self-sabotage. And then before you know it, you're down more than you want to be. You're past your limit. Perhaps you've even blown your prop account. So really think about, if you can, think about where in your trading and possibly in your life, any circumstance, right, that you've experienced FOMO, and where in the body does it sit? So the body tends to keep score. And so as soon as you can recognize that you have this feeling and release it within the body, then you can let it go.
Yeah, I've never thought about where I feel that tension.
Mm-hmm.
Yeah, never thought about that before.
So just again, FOMO is, the root of it is comparison and scarcity and looking sideways or behind. Okay. Everybody understand? Good?
Mm-hmm.
Good. Okay. So the second one is desire to engage. I fall in this category. I've fallen in this category for many years. I would say I'm an extroverted introvert. And so trading, it's the task that I've chosen because it's a challenge. I love it. It's just me and my brain and my body. And I just love to participate. Now, there's often times where I'm participating in the wrong spots because I'm so excited to participate. I was trained as a news trader, so I need not say any more beyond that. But so no specific setup is forming. Sometimes the market is alive and you want to be in it. This is about participation, not a trade. It's the hardest state to catch because it dresses itself up as readiness. Right? You sit down in front of the screen and you're so excited to engage. There's nothing yet going on, but you put on a trade because you want to engage. Mm-hmm. So this is really the core of what I've worked on so hard over the last 7 years that I've been back trading. And so what happens? So it's restlessness, buzzing energy, wanting an outlet. I should be doing something. The screen is moving. So I could have, yes, okay. The pull towards engagement itself over aliveness. So it's somewhat of the dopamine hit. So where does that sensation live? For me, definitely the heart space of my stomach. I get really excited. I get like flutters. So I work really hard to ground myself before I execute. And sometimes it works. And sometimes I have to work harder to curb it. Especially because back in '99, where we were taught to just put on a feeler trade, where you just sit down and you put on a feeler trade to see where the market's at. I mean, you can't do that anymore.
Yeah, the market's going to tell you where it's at pretty fast.
Yeah. That doesn't work anymore. So a third state would be impatience. The setup is forming, yet it's not complete. So this would probably, if you were grading this trade, this probably would be your B+ setup. You know what you're waiting for. The trade is right. The timing's not there. So you're going to take a little heat on that trade, or you're going to take a loss, or you'll take a profit, but it is a B+ trade. It's not the ideal trade. So where does that impatience live in the body? Anybody want to throw it out there?
Yeah, I don't know. I've never paid attention to where it lives. So I paid attention to the state.
Yeah.
I'm going to have to start paying attention to where it is in the body.
Yeah. I mean, so all these states, I mean, there's more, obviously. These were the top three and that I wanted to address, but certainly on the less desirable state of things, right?
Yeah.
To help traders recognize, put a name to the state, and then recognize where it sits in the body. Because again, the body keeps score. So let's say, like, I had such a desire to engage, and yet I had so much stuff going on in the last 2 weeks. Of course, I had a hamstring problem. So that's where it showed up. And so had I curbed the desire to engage better, then I probably, I mean, it's hearsay, but the hamstring problem wouldn't have been as intense as it was.
Is that going to be different for each person, or
Yes.
is it like, yeah?
Yeah, 100%. Absolutely. Great question. Yeah. We will, I mean, we're so different. The idea is to just recognize where that state sits. And that goes for any emotions. You know, that like something's going on in whether it's trading or your life and it's difficult and you're like, oh, it's such a pain in the neck. Watch your words. Watch your words. And you wake up the next day and you slept wrong, you have a kink in your neck. You know?
Yeah.
You know, or that experience or that person is an Achilles heel. Watch your words. You know? So okay, so the root of that is time wanting what is coming to arrive faster. So it's pressing. Right? Okay, moving on. So ideally, we would want patience. So I think Manny posted about this the other day, yesterday, when I was talking to David, he had mentioned it as well. So patience is not the absence of action, it's the presence of trust. So similar. The setup will come or it will not. Either answer is complete. Your only job is to be ready when it does and to let it pass when it does not. So sit with that, let the screen move, let others do what they do. You are here for your trade. Your trade is worth waiting for. That A+ trade. Okay. Everybody agree? Okay. So some questions before your next trade. 3 questions. Do I have the specific setup that matches my rules? Am I entering because the setup is complete or because the screen is moving? And as David always says, would I take this trade if I had already hit my daily goal, or does this bring me closer to my goal if I take this trade? So David from PTG in the other room. Okay. And so there's a reflection that you guys can fill out. And you guys had asked for the PDF, I think, and I told you to log in. So today I created a PDF that you can work off of. But which of these 3 states do you recognize most in yourself at the screen? Where do you feel it in your body?
Yeah. I recognize most of like impatience. I'm trading because I want to trade, not because the market's telling me to trade.
Yeah.
Because sat down today and decided I was going to trade.
Yep.
Yeah.
And that's when plans are so important. And I share that, I have a plan, I have leans and the indicators that I use, but certainly as I continue to evolve in my trading, I need to tighten them up. And it's just taken a really long time for me to commit to that tightening up, and picking my A+ trades. Quite often. Go ahead.
Oh, well, I think we've been probably all of our lives been conditioned to go to work, do something, be productive. So it's like, well, I'm here in front of the screen and the screen is moving and it's flashing. So I need to do something.
Yeah, for sure. Yeah. Or on the flip side, and this is another state that I'm engaging because I'm also avoiding all the other things I need to take care of throughout my day.
Yeah. Yeah, I've done that.
Yeah.
Yeah,
for sure. Yeah. I just would rather be by myself with the screens than have to finish up cleaning out a closet, or whatever the case may be,
Yeah, doing actual, real productive work whenever sitting here is not productive.
Correct.
Yeah.
It's hard. I mean, and this is about the mindset and the self-actualization that we try so hard to work on so that we're aware during these different states and when we're in front of the screens.
Yeah. Or if you hit your daily goal in like the first 15 minutes, 30 minutes, and then you're like, well, that was nice. There's 6 more hours left. So, maybe we can multiply by 6. And then, of course, it doesn't happen.
Or take it down by 2.
Yes, exactly. Yeah.
And we've all been there. And it's not, I mean, I don't mean to laugh by any means. I'm just, I've done it many times myself. Mm-hmm. And it's painful.
Yeah, there will be another day. The afternoon trading can be a waste of time. Exactly. And I just know, I've had some good afternoon trades or late day trades, but I know by a certain point, if it's noon and I'm still clicking around, it's time to go do something else.
For sure.
Yeah.
I mean, you have to, it takes, there's liquidity based on time frame. And then, depending on how you trade, mm-hmm. Even though there's higher volume in the morning, perhaps that's just too chaotic of a period of time and too undecided between the bulls and the bears.
Yeah. Or you're looking for specific targets. So you may hit those targets later in the day.
Mm-hmm. Yeah. And then you always, I feel like, so, as the years have gone by, the bond close has always been important, but then it's, for some reason, it's like now it's from like 2, 2:15, 2:30, 2:45, 2:50, 2:55, 3 o'clock. And now we have all these tight markers for more volume, including the MOCs, obviously, but towards the end. But now we have, it's just like, you can trade the afternoon trade with a little bit more of a defined market environment, so to speak, versus, straight in the morning. You can find it, and it can be a waste of money. I mean, so they used to say on the floor, the goal was to come back tomorrow. Mm-hmm. That was the intention. And then anybody who was trading after 10:30 or who was still in the pit from 10:30 until 2, you knew that they were trying to make their money back.
Yeah.
So, and it's somewhat similar, but again, it's how you trade. Are you a slower trader? Do you like rangy trades? Depending on, the middle of the day tends to be a rangier trade, but not all the time. Mm-hmm. I mean, I know that as I set out in this, yeah, exactly. Yeah. And those are, you're trading news, you're trading numbers, economic data numbers. Yeah. So, any questions with this information?
No, I think this was great. Learned something new. I'm going to have to pay attention to where I feel restlessness and tension.
All the time. It's not just trading.
Right.
I always, when I talk about recognizing this stuff too, it's just, I think about as a little kid in junior high when I was chewing my nails and chewing pens. That's where it was coming out. And then when I first started trading, I was chewing a ton of gum, like 70 pieces of gum a day. It was super gross. My office always stunk like gum. It was gross. But until I started to work on the emotion that was attached to the anxiety, then things started to come more clear. And then I could start to, it takes work to recognize where this all sits. So now it's, versus it was external, now it became internal, because then I could say, okay, I'm feeling this way. And now it's showing up in my, over the years of the work, where can I pinpoint it? And again, I mean, it takes a lot, it takes work if you're up for it.
Yeah. It's easier to avoid it.
Totally.
Mm-hmm. Yeah.
Yeah. But why would you? I suspect that most traders, if they're looking to avoid what we're talking about here, then I would have to say that most of the people that are here want more awareness.
Yeah.
Yeah.
Yeah. Okay. Well, this was great.
Paul, thank you for chiming in. That's interesting. A 9-minute point at the top or the bottom of the hour has been a point to watch. Wow. How'd you get to that? Paul, how did you get to a 9-minute point?
The hard way.
Yeah. But it's not 10 minutes. It's not 15 minutes. It's 9. Is 9 one of your lucky numbers? Okay. And the 3-minute chart would give you the 9. Got it. Interesting. Thanks for sharing. Okay. If you don't have any questions.
Hi, Marlon. So quick
or want to
question.
chime in? Anybody want to share?
Me and Renee are in a
Yeah, I'm gonna run, Dani. I'm gonna catch up on some phone calls, but this was great.
and I'm trying to do. I have a
Thanks,
screen
you
share
guys.
going,
Appreciate
but
you.
I'm trying
Take
to
care.
get my camera going. Is there a set? So I do the camera share and everything, but it just doesn't open. I'm in work. No, I'm in workshop. Oh yeah, sorry. You know what? I should have checked in there, but